Joining us right now is the Dean of the Columbia Business School and former Chairman of the Council of Economic Advisors, Glenn Hubbard. Glenn, good to see you. Thanks so much for joining us.
Likewise, thank you.
Just getting this final read on fourth quarter GDP of 2.9% growth. Your thoughts on where we are in the economy right now?
Well, it's a number I expected. I was looking for somewhere between 2.9 and 3%. I think the economy was going into this year very strong. Maintaining it will depend on the effects of the tax bill, on a continued reset about expectations for growth. But I think it's a very good news number.
Glenn, one of the interesting things I look at is the durable goods reports, and they've actually beat my expectations, not only for non-defense spending. So what are the reports you're looking at, and where are they showing growth for this year? Because, the durable goods that came out on Friday were gangbusters. That's leading me to believe we're going to get above a 3%, maybe 3.5% quarter this year alone. What are you seeing for the first quarter this year?
Well, I think we've got good news going in. As you say, capital spending is up, and that's very promising. That had been a weakness in the recovery going in. So I think that's all good news. I think it would be hard to imagine the economy growing 3% plus consistently, but being in that range doesn't strike me as odd at all.
Glenn, Mary Kissel here, Wall Street Journal. This Trump administration came into office just as the business cycle was nearing its end. Tax cuts really seem to give the economy a boost, but now there's a lot of concern on the trade front. How do you see that impacting growth going forward?
Well, I think a big impact right now, Mary, is uncertainty. The actual measures taken thus far, like the steel and aluminum tariffs, while they're not good public policy, have been fairly modest. The China action as well. So I think what business people are waiting for is this a game changer or is this more rhetoric? On the other side, the renegotiation of the U.S.-Korea agreement looks pretty positive.
Glenn, it's Dagen McDowell. What about the rise in borrowing costs? Although we saw the yield on the 10-year Treasury yesterday close below 2.8%, it hadn't been below that level, I don't think, since early February. You've got a front-page story in the Wall Street Journal today that the rate that banks pay to lend to one another, LIBOR or the London Interbank Offered Rate, it's its highest level in a decade. And again, this rate is used to determine what the rate paid on about $200 trillion in loans globally. How much of a headwind is that for economic growth, particularly here in the United States?
Well, it's definitely a headwind, but I think we have to step back and ask, why are rates rising? They're rising because it's a better growth environment. We're rising because inflation is getting back closer to where the Fed wants it to be. So I don't view it as a bad story as long as all this is gradual. As long as growth is there, I think we're fine.
Where is the growth, would you say? I mean, we're just 2 weeks away from the first quarter earnings season, and we're expecting earnings for the first quarter to be up 16%. Where specifically do you see the most growth right now in this economy?
Well, I think we are seeing a rebound in capital spending sectors. Obviously, some weakness right now in the technology sector, but strong still in financial services, in healthcare, generally throughout the economy with consumer spending. So I'm pretty optimistic. Again, what would worry me would be policy uncertainty or geopolitical events.
Well, don't we have that? Don't we have policy uncertainty and GOP and also upset and uncertainty about the foreign story in terms of national security?
What we do, and I think what we have to do is focus on what we can control, which would be the policy uncertainty. So it would be great to see the administration focus more on its low-frequency successes and less on high-frequency noise.
Yeah, but how are consumers spending all this money, Glenn? Mary, again, from the Wall Street Journal. Aren't they taking out debt? Are they putting it on credit cards, or is this coming out of savings?
It's out of savings, and that, of course, will require some adjustment going forward. Right now, consumers are more optimistic about growth and wages. If that optimism proves premature, obviously consumer spending would take a hit.
Yeah, I think one of the things that we're kind of tiptoeing around, too, is the strength of the dollar. Last year, the market was up 20%, and one of the reasons why is the dollar was down 10%. You're starting to see the dollar actually sell off here. Is that good for the economy going forward into regards to, hey, what's going to, for the stock market right now? It's not good necessarily for our trade deficits and our exports, but what is your take on the dollar and how it's going to weigh on this market?
And by the way, you would have expected the complete opposite, right?
Yeah.
If the economy is growing the way we think it is, you would think that we would have a stronger dollar.
And you think we'd want a stronger dollar.
Right.
They're talking down the dollar, which is remarkable.
Right.
Terrible idea.
Yeah, I agree with everything that's just been said. I mean, first of all, the dollar should be determined by market forces. Those market forces, in my expectation, should be pointing toward a higher dollar over the short to medium term. Obviously, a lower dollar, it does revise earnings and help stocks. But for the country as a whole, we should want the dollar and market forces, and we should want a strong dollar, not a weak one.